All right, ladies and gentlemen, welcome to another episode in the series of Getting Funded in 2024. Now, in today's episode, we are going to be talking and going over the SMT technique, which stands for Smart Money Technique. The SMT Divergence technique, you do not need whatsoever, but I'm going to include this in the series just so you guys can have extra conviction and extra confluence whenever you guys are trying to identify unicorn setups, because sometimes you'll have a situation where ES has some sort of unicorn with an SMT divergence, and then NQ doesn't have a unicorn, and you have that SMT divergence, which adds extra confluence and extra conviction because you have more confluences giving you the same trade idea in that unicorn setup, right? So that's why I wanted to include this SMT video here in this series. I also have an old SMT video on my YouTube channel, but that's a little bit outdated, and I didn't show you guys the high probability SMTs and how to spot them in that old video. So this is going to be a new and updated SMT video from me. So hope you guys enjoy this. And again, you guys do not need this. Again, all you guys need is the unicorn setup and all the things that we've talked about so far thus in the series. But an SMT divergence does add extra confluence and extra conviction in your trade ideas when you are trading a unicorn, because sometimes you'll run into those situations where you do get an SMT divergence in one of the correlated assets. So let's go ahead and move on to the SMT video. So basically an SMT is basically when you have correlated assets like such as the ES and the NQ, the index futures, the S&P 500 and the NASDAQ 100. This works on EU, GU, EU with DXY, GU with DXY for those that trade Forex. You basically just want to find correlated pairs. Now, I talk about those correlated pairs in my old SMT video if you want to go and watch that. It's a very short video. I think it's like an 8-minute video. If you want to watch the old SMT video that I have on my channel, I go over all the correlated pairs that I watch, but I mainly trade index futures now. So ES and NQ are the correlated pairs that I watch. So SMT divergence is basically when one of the correlated pairs takes its high or low and the other one refuses to do so. So in this basic illustration, I have a bearish SMT here. We have ES taking its high, right? Taking its buy side liquidity, and NQ refuses to do so. Now, these pairs are supposed to be correlated. That's why I call them correlated pairs, because these pairs are supposed to be in tandem with each other. So when ES makes a high, NQ is also supposed to make a high, like all the index futures and YM as well. I don't really use YM because YM is the Dow Jones Industrial. It's kind of an outdated index, but you still can use it by all means. I just personally don't. I really just focus on ES and NQ. But that is basically an SMT divergence when one of the correlated pairs takes its high or low and the other one refuses to not do so, okay? So they're basically, there's like a discrepancy and these two are supposed to be correlated. So this gives you a clue that smart money is probably trying to reverse the move, or they are trying to, there's manipulation going on, right? There's just a discrepancy going on, and that is going to give you a clue on what may come, okay? So never take trades just based on SMT. That is a no-go. I've tried to do that when I was starting and it didn't go so well, and I've seen others try to do that as well. It just doesn't go well, okay? But how do you spot high probability SMTs, okay? So a high probability SMT, in my opinion, from what I've seen, and this always usually works out, is when you have an SMT divergence, right? Such as ES taking its high and then NQ doesn't. But this is the cool part, right? When you have an SMT like this, when one of the correlated pairs takes its high, and even if you flip this, this is a bullish SMT, right? ES takes its low, NQ doesn't. A high probability SMT, in my opinion, let's say this is the 5-minute time frame and you have a 1 hour fair value gap or a 4-hour fair value gap, right? And then ES takes its low, and NQ also has that same 1 hour, 4-hour fair value gap, whatever you want to call it, right? A higher time frame PD array in general, right? You have an SMT divergence in a higher time frame PD array, right? Such as this example here, you have ES taking its low into a higher time frame PD array. Now you have an SMT confirmed because NQ hasn't taken its low over here, right? Into that same higher time frame PD array. And it doesn't need to have the same higher time frame PD array, such as an order block, breaker block, fair value gap, you know, all that stuff. It doesn't need to have it. But sometimes, and most of the time, these correlated pairs have like the same higher time frame PD arrays in kind of like the same area. But let's just say NQ didn't have that same PD array, right? But ES does have a let's say a 1 hour, 4 hour fair value gap, but you have an SMT in that higher time frame PDA array. This is a very high probable SMT play, okay? And then you get your, your break of structure, and now you have a breaker block, and now you have a unicorn, and now you have all these confluences coming together, and now your conviction increases, okay? So this is the whole point of an SMT divergence. It's just something to add to your little war chest so you can have extra conviction and extra confluences with your unicorn setups, because most of the time when you have this smart money reversal and you have this SMT going on, and especially when you have it in a higher time frame PD array, such as a fair value gap, a breaker block, on the higher time frames and your intraday day trading, these will start to reverse. And this is where SMTs really come in handy, when you start seeing an SMT in a higher time frame PD array. That is the secret with SMTs. Nobody really talks about it. Everybody just kind of marks an SMT and they're like, oh yeah, it reversed because of an SMT. No, it's reversing because it's tapping into a higher time frame PD array, and that's where smart money is reversing from, okay? Price is just going to PD array to PD array. It's literally bouncing from one PD array to the other PD array, and most of the time they're fair value gaps. So study SMTs, go and backtest them, find discrepancies between the correlated pairs. For me, I really only trade ES and NQ, but these are very high probable SMTs when they are in higher time frame PD arrays. And you can see here, you could probably spot a unicorn setup here. I won't be showing live examples just because it's a very simple concept. SMT is not hard to grasp. If you guys want to go see live concepts, go watch my other old SMT video. I'll link it somewhere here. I kind of goof around in that video, but it's a very short and straightforward video as well. But yeah, you get a smart money reversal. Higher probability SMT is going to always happen in a higher time frame PD array, such as this illustration right here. And then you get that break of structure. You have your breaker block here. You take that low. And then if you have an imbalance here, a fair value gap, now you have all the conviction and all the confluences coming together to tell you that same story. And then you target, your higher time frame PD arrays, or external or buy side, external sell side, internal buy side, internal sell side, whatever the situation is. Okay. That is basically what an SMT divergence is. It's not hard to grasp. It's just when one correlated asset has a discrepancy with the other correlated asset. Sorry. That is basically what an SMT is. It's just when one of the correlated assets takes its low or high and the other one refuses to do so. And then if you combine that with the SMT happening in a higher time frame PD array, you are golden. You are probably most likely most of the time going to get a reversal off of that area. And then you could start looking for your unicorn setup if it happens, okay? So yeah, I hope you guys enjoyed the SMT video. And again, guys, you guys do not need this, but this is just something to have in the back of your strategy whenever you're trying to find unicorn setups or trying to determine where reversals may happen, so that you could try to spot unicorn setups. In the next couple of videos, you guys are not going to need them. Again, extra confluences for extra conviction in these setups. So hope you guys enjoyed this video. Catch you guys in the next one.